Stocks crash, bonds bleed, and fiat melts like ice in the sun. But there's one asset quietly stacking power while the world burns, and it's not gold. It's faster, harder, and scarcer. And while your 401k drowns in dollar decay, this one move could position you for generational wealth, and without asking permission from Wall Street. So stick around because I'm going to show you why the ultimate inflation hedge isn't in your portfolio as of yet. Now, we've been lied to about how to protect our wealth. They told us to diversify. They told us inflation is healthy. They told us a 7% annual return makes you a genius. But what if everything you've ever been taught about hedging inflation is built on sand? Now, this video is about the asset class that turns fiat decay into digital leverage, and why early adopters won't just survive the reset, they'll own it. See, imagine living in 1923 Germany. You've got savings in the bank, a steady job, a comfortable life. Then overnight, your money becomes toilet paper. But one man down the street ignored the banks and bought gold. Now today, that's Bitcoin, except it's faster, borderless, and engineered to resist the same inflationary destruction at digital scale. Now here's the truth that they don't teach in finance school. Inflation is not an accident, it's the business model. Because fiat currencies are built to decay. The Fed targets 2% annual loss of purchasing power, and on purpose. So what do they tell you to do? Buy stocks, buy bonds, buy real estate, just stay in the game. But here's the punchline. All of those assets are priced in dollars. The same dollars lose in value each and every year. Now that's not a hedge, that's financial Stockholm syndrome. Now enter Bitcoin, an asset with a fixed supply, 21 million, not one more, and ever. No CEO, no money printer, no political backdoor. And every 4 years, the issuance gets cut in half. Every year, fiat expands. One bleeds, the other hardens. Now, Bitcoin doesn't protect your purchasing power, it weaponizes it. While fiat savers lose 8% to inflation, Bitcoin holders gain asymmetric upside. Because here's the asymmetric truth. Even 0.01 worth of Bitcoin, which is just 1 million sats, could outpace decades of fiat-based investing. Now, this isn't speculation, it's defense with upside. So next time someone tells you Bitcoin is too volatile, ask them this. Volatile compared to what? A dollar that's lost 98% of its value since 1913. Because here's the real kicker. Bitcoin isn't volatile. Fiat is. And Bitcoin is the still point in a spinning financial circus, a life raft that rises as everything else sinks. And in a world this rigged, that's not valuable, it's priceless. Now, if you're tired of chasing returns in a melting money casino, and if you're ready to stack assets that hold weight while the world prints itself into oblivion, then go ahead and hit subscribe. Now, this isn't a hype channel. It's financial truth in an age of deception. So start stacking, not for pumps, but for power. Because the next wave of millionaires won't be made on Wall Street, they'll be forged in code, and one sat at a time. Now, if you want to go deeper into this, my ebook Orange Pilled is linked down below, and it's the wake-up call they never wanted you to read. Now, I do also have to chuck this disclaimer in here as well, and I highly suggest just pausing the video and having a little read. Now, if you've made it this far, and if you're looking for something else to watch, then click right here and have a watch of this.